Hey traders, checking in on the stock market today. Bears finally get a win into the end of the day. Is this the start of daily consolidation? How much pullback can we anticipate? And I'll show you the clues that I'm watching for to determine whether or not the bulls are losing control or if this is just the start to an all-time high rocket. So looking at the S&P 500 futures, it was a daily inside bar day today, but it's a little bit different if you look at SPY or if you look at the futures. And this happened back on March 23rd as well. So you look at SPY on March 23rd, we closed at the low of the day and daily consolidation was underway because we broke the low of the previous day. Today, we broke the low of the previous day, daily consolidation underway. But the S&P 500 futures chart is still a stair-step pattern, and that's very important to note. The futures chart is not seeing daily consolidation underway right now. So we did see a lot of weakness into the end of the day, then a little bit of a bounce into the close. So if we were to see bulls control all overnight tonight, essentially the futures chart has to confirm another hourly lower high and lower low if we're going to see daily consolidation underway. If not, 4-hour EMA 12 support holds and a 12-hour bull flag forms. That's on the table as a possibility. So bears still have proving to do. They did prove something to us. It's the first time they showed us weakness in the last week of trading. Question is, do we follow through? So something to make note of, the current psychology of how we are trading in this market is essentially you have a ton of fundamental bears that are baffled by the current price action. Okay, that's understandable, all the buzzwords that they're paying attention to. But what that leads to is any initial little sign of consolidation, bears all jump in saying, okay, finally, this is it. We're finding a top. We're going to see the pullback. And then we see a new high, at least in the last. This is the example for the last few days. Let's just go to the NASDAQ for simplicity. So again, I pointed out recently how the NASDAQ has pulled back plenty during the trading day. Multiple pullbacks of 1% to 2%. So you see this and you say, okay, bears are jumping in saying it's finally time. We're going to pull back. Daily consolidation. It's overdue. Economy. And then we see a V-shaped bounce. And who's buying up here is the question a lot of people are asking. Number one, big money doesn't have a problem averaging up and increasing position size at higher prices, but it's also shorts. So anybody that jumps in and doesn't want to hold overnight up at the high of the bounce gets squeezed out and they are added to the buying pressure. And again, we've seen this multiple times on the hourly time frame. It happened again yesterday. Big pullback on the morning. By the end of the day, that 1% drop is evaporated, and anybody that went short on the 1% drop and doesn't want to swing overnight has to cover, and they are part of that buying pressure. So we've seen it on the hourly time frame. What's going to be very key for me from here is observing, okay, we've seen it on the hourly. Does that now happen on the daily? Do we start daily consolidation, form a little bull flag, all the bears jump in, saying, okay, finally we're topping out, it's making sense now, bull run over, bear market can resume, and we just squeeze them out again? If that happens, all-time highs, in my opinion. If we form a bull flag from here, my probability needle that all-time highs are coming is going to take a big tick into the likely scenario. So the size of retracement on the next time we see daily consolidation is going to be very key for me. And again, the futures chart in this daily stair-step pattern is certainly one to be paying attention to, because we can say that the SPY bear break of the low of yesterday will have zero follow-through unless the S&P 500 loses the pattern of a higher low every day on the futures chart. So I'm going to be watching this retracement size very closely to help gauge probabilities. And I can say that if daily EMA 12 holds, a bull flag is on the table, and the possibility of squeezing out a fresh new round of shorts is on the table as well. So we can pull back from the high of this bounce an easy 3% and still be a bull flag. So for me, I had a good amount of bear. I had the most bear exposure today than I have had in probably 2 weeks. And I'll talk about how I did it when we get there. But you better believe tomorrow I will be rapidly exiting those positions if bears do not prove it. Bears proved it to me today on the hourly time frame, but they're not proving a thing to me on the daily time frame just yet. Inside bar on the S&P 500 futures, it can be a 12-hour bull flag. It is absolutely on the table. The NASDAQ is the same thing. Daily inside bar, higher low every single day except for a very tiny amount back here. 12-hour bull flag is on the table. Bitcoin's a 12-hour bull flag. Bitcoin started its 12-hour consolidation almost 24 hours in advance. Maybe 12 hours in advance than the broader market. But 12-hour bull flags are on the table if the bull punishment is going to continue for the bears. So over the rest of the week, what do we got? 2 days? The question I'm looking for is number one, do the stair-step patterns break on our futures chart? If the answer is no, full bull control. If the answer is yes, into next week, the question is then, what is our retracement size? Our daily bull flags on the table. And that's it. That's pretty much all it boils down to as to what I'm watching in the short term. So the futures trading tonight, overnight, is fairly key for me. Because again, if that low is set, and we just bounce from here, which again, we're bouncing. You know, the S&P 500 just took back the majority of the weakness that we saw. So if the bulls keep control overnight, do they create the space for an hourly trend change back in their favor? And if we confirm an hourly trend change back to the bulls, probability for a 12-hour bull flag increases significantly. SMH, daily consolidation underway. Short-term support 270.07. 290.35 was a key resistance level that the bulls did not break. We are still in a weekly downtrend. We're not going to lose sight of that. Inverse head and shoulders will be on the table if we do top out from here. But we would have to lose that little daily higher low of 270.07 if we're going to see a weekly lower high shaping up. Hourly time frame, we're just going to look for a lower high to be the result of a bounce from here. Bulls have to regain the hourly uptrend if a daily higher low is going to be set. Tesla, daily stair-step pattern intact. Double top with the high of yesterday by less than $1. Bears must break 1084 tomorrow to lose the stair-step pattern that's been intact forever, 12 days now. And then again, we will be scouting hourly oversold. That's another missing point here. If daily consolidation starts in the broader market and our futures charts lose the stair-step pattern, do we see hourly oversold conditions on SPY and QQQ, which have not happened yet? Do we see that mark our daily higher low like it did on NVDA, like it did on Amazon, like it did on XLF, XLV, NIO? If that happens, bulls keep complete control and it's a daily bull flag. So I'm watching the response of the market to first hourly oversold conditions when we see daily consolidation shaping up. And Tesla will be the same. We have not seen anything near first hourly oversold conditions since we've gone 50, it's been a 50% bounce. Good Lord. Yes. Tons of space for a daily higher low. Bulls have not had any chance to buy a dip on the daily time frame. They've had plenty of chances on the hourly, but they have not had any chance on the daily to make an entry. So again, I do still feel there's a lot of FOMO on the sidelines looking at Apple and looking at Tesla and saying, man, I'm going to buy next daily consolidation, but it's not happening and I'm just going to have to wait for it. I'm so fascinated by how this is going to play out. XLV. So daily higher low set, inside bar here as well. If we do see a pullback into daily consolidation, anything above 134 will be a daily higher low. And bulls keep complete control on the daily as long as the daily uptrend remains. There's a potential rising wedge here. Let's keep an eye on that. Let's go to the 4 hour. Not going to spend much time on this, but that's how I would have it right there. But again, I just care about the daily higher lows. Do we keep setting daily higher lows? Because if the answer is yes, then the bulls have complete control of an uptrend. XLF. So I shorted XLF. Why did I short XLF today right at the open while live streaming? Here are my thoughts pre-market. A lower open this morning puts highs of yesterday as key resistances, and clear hourly uptrends are our guides if bears are to prove anything. So that's talking about the broader market. I personally will be paying more attention to XLF for a potential bear swing entry, scouting a weekly lower high to be the result of this bounce, and making note of the comparative weakness yesterday. Watching IWM and growth closely to see if the laggard bull action can continue. CCJ needs to break resistance from the swing I entered yesterday. So why am I looking short on XLF? Okay, first things first, the weekly time frame. What do I feel is the most likely scenario? I'm more confident looking for an XLF weekly lower high than I am looking for an S&P 500 weekly lower high. And that's just because of the nature of the beast. The S&P 500 sees rotation. XLF doesn't see rotation. It's one sector. It can see rotation between its individual names, but it doesn't have the breadth. I don't know if I've ever said that word. Breadth. It doesn't have the breadth of the broader market. The broader market can see tech pull back and healthcare picks up the slack, and then healthcare pulls back and energy picks up the slack. XLF doesn't have that. It's one sector. So I'm more confident in the most likely scenario playing out technically on XLF than I am on SPY. And for me, the most likely scenario is a weekly lower high. So what I saw yesterday is a daily bull flag confirmed with zero follow through and relative weakness in this sector comparative to all other major sectors. Okay, I'll take a bear entry because again, I know I want short exposure. My goal, having long swing positions that I am not going to sell. I'm not going to sell Tesla and Facebook and MSOS on this next daily consolidation because I know daily consolidation is inevitable. All the names that I'm holding, well, most notably Tesla and Facebook, daily consolidation is extremely overdue. It's coming. And I'm going to hold through it because that's the way markets work. Daily consolidation is inevitable if you want to see an uptrend. So knowing that, I know that I want short exposure to offset any drop that my account sees because of my long exposure. So I've been playing with some SQQQ as a protected position over the past couple of days, overnight, just in case. And now today I increased my short exposure because XLF is shaping up for, again, anytime, and it's, someone in the chat room says, shouldn't, the financial sector be stronger if there's an increased raise of rates? If we're looking at probabilities increasing of a 50 basis point raise, shouldn't the financial sector be going up? And my answer is, I don't know, I guess, but it's a daily bull flag with no follow through, anticipating a weekly lower high as the most likely scenario. So I look short. That's all I care about. And again, the most notable thing for me over the last 2 weeks is seeing how many fundamental traders are baffled. It reminds me of the Reddit move days where everybody's looking at GME and AMC and saying, what in the world is going on? Not realizing it's a video game with flashing numbers. And I'm seeing that now in the broader market with everything that's gone on the last 2 weeks. But the bottom line is it's a daily bull flag that confirmed with zero follow through. And I'm looking for a weekly lower high. So I entered short first thing. And my stop was based off of the hourly lower high from yesterday. I said, all right, I'm grabbing a short. I grabbed FAZ. I probably got filled when XLF was 39.48 or something like that. And I said, okay, well, if XLF breaks 39.57, I will exit because that's the hourly lower high that I'm playing off of. We didn't, and I'm still in that position. But you better believe I am making note of the massive buying volume right into the end of the day. And the fact that we are still in a daily uptrend. I really wanted to see 38.96 support break, and it didn't. We're still forming these little higher lows. So if the bulls come out tomorrow, again, I will ditch this position real quick, especially if our futures charts are keeping their stair-step daily pattern. Tomorrow's the last day of the quarter. But I need to, if I'm going to keep holding FAZ, I have to see 38.96 support break. IWM gave back yesterday's bull move. So short-lived, and the hourly loss of support of 209.25 was your first red flag. If the bulls are going to keep complete control, they keep the hourly uptrend. They hold that level and see continuation. So as soon as that level breaks, red flag. So then we dropped very significantly into the end of the day. We are still in a daily uptrend. So we're back testing. Let's see, the gap fill is 206.21. Didn't quite fill it, but anything above 203.03 is a daily high or low. A bull is going to look at this and say, well, we are still, even with that weak close, we're at the highest price aside from 0.5% of trading in the last 2 months. And that's a true statement. But it's definitely a red flag to give back how much of that move yesterday that we did. So it's looking like, and not surprising, if we were to see broader market consolidation, that the highest risk, highest reward names would be ditched first and hardest. And that's what happened today. So it is still a daily uptrend, but if we lose the daily uptrend from here, it'll be a red flag. And one thing that I keep saying is growth names are not positioned on the weekly time frame anywhere near many other sectors and individual names. I think yesterday was the video where I highlighted how the percentage move that so many of these growth names have to see, the fact that we need weekly trend changes to confirm on so many individual growth names like ARKK. It was yesterday. ARKK on the weekly time frame is not proving a thing. There's a ton more proving over the next few months that has to happen if we're going to be confident that a long-term bottom is set. Tesla is making us confident that a longer-term bottom is set, and it took 2 weeks to do so. These growth names need a lot more time than that because we have a lot more downward trends, a lot longer time frames of downward trends to reverse. Biotech sector, bull break yesterday, a little bit of follow through this morning, but again, giving it back. With the IWM weakness, we are in a weekly downtrend as far as I'm concerned, and we're rejecting from weekly EMA 12 resistance. So a nice big laggard bull move for growth yesterday, but giving most of it back today. And again, we can say the growth sector is not positioned well if the broader market were to see weekly consolidation. We're not even talking about weekly consolidation because we have to see daily consolidation first. But we have to keep that bigger picture perspective. Not all sectors are created equal. A lot more proving to be done. TAN is a potential rising wedge to be keeping an eye on. We had a very key bull break with zero follow through. So we were watching for TAN to be the laggard of the laggards as far as growth names yesterday. The confirmed bull flags, and TAN did not. It did today, but no follow through. And if we drop down and break 73.82 from here, we're shaping up weekly consolidation. So this is a rising wedge setup because we have broken resistance now a couple times with zero follow through. We had a resistance of 77.81. We broke it by 17 cents. We then broke that top by 17 cents. So these bull breaks are lacking follow through. Still a daily higher low pattern, but certainly not giving confidence to bulls. CCJ, nice bounce follow through, daily higher low very clearly set. Big upper wick though, the hourly consolidation was more than the bulls want to see. It's still an hourly uptrend, but we created the space now for an hourly lower high to be the result of the next bounce. So swing position from yesterday, honestly, I was focused on a lot of other things. This is one of my smaller swing positions, probably the least most important positions I have aside from GLD and SLV. And I even said that if we get up to $29 and break it this morning, that I'll be looking to take some off, but I was more focused on trading TLRY, and the profits from trading TLRY were much more important than what CCJ ended up pulling back. So I'll probably exit CCJ if the low of today breaks tomorrow, because that would then shape up the possibility of confirming a daily downtrend. And that would be risk-free if I exit with 27.84 breaking from the trades yesterday. TLRY, bull break with no follow through. This was a good trader today, was really in the zone. So saw the bulls shaping up momentum. We know 871 is a double top and the level to be watching. And I gained confidence that we were going to break that level. I actually front ran the break. This was an example where I bought right under resistance. I do not do that very often, but I was watching how TLRY was trading comparative to all of our major sectors, and I got real confident that 871 was going to break. So I bought it something like 867, right as we were battling right under that level. And I did, quickly fill out a sell order, and I would have market sold if we did see a notable rejection. But we broke resistance, so then scaled out. I was actually very actively trading. I'm not going to go completely in depth because I actually traded multiple times on this move up, but was all out on the break of $9, re-entered at 5-minute EMA 12, sold knowing that a 5-minute equilibrium was the most likely scenario, re-entered at 5-minute EMA 12, and then just waited and put my stop under 872, and then stopped out. And I was done with it. I didn't trade it once again. My mindset on TLRY today is I'm just going to keep scalping gains. I'm going to keep racking up day trade wins. If we have another big time runner, I will have exposure for it, but I am not thinking bigger picture mindset. I'm thinking real short-term mindset. I don't care if I leave money on the table. That was my mindset from the get-go, and it really helped me win trading it bullish, and I didn't try one more time for a bullish entry on this entire drop. And if I had, I would have given back some profits because bears absolutely controlled the rest of the day from there. But that's how I traded TLRY. Gold, good sign for the bulls to confirm the bear flag with zero follow through. So still some proving to be done, but it does look like that headline reaction yesterday was a climax flush bottom. So I am still in my GLD SLV positions with the stop under that reaction low. And on oil, daily high or low set. Anything under 116.64 is a lower high. And we're going to watch for this equilibrium to continue playing out into next week. Clearly, the commodities are trading correlated. Clearly, there's a bit of an inverse correlation with the broader market. It comes and goes, but generally, that's what we're seeing. But what it all boils down to, do we see the stair-step pattern break on futures charts tomorrow? And if we do, how does the market respond to first hourly oversold conditions in SPY and QQQ? Do we see daily bull flags form that could potentially put a fresh wave of fundamental bears underwater if daily bull flags confirm? And again, I will very quickly exit my short exposure if we do not break inside bars on the futures chart bearish tomorrow. Hope you're well. Do good things. See you soon.